Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 10th of February 2023. The first chart is the US dollar index futures, and we'll just put the lines in quickly so the chart can come alive to some degree. I know I say it every week, but this is where some supply came in at the highs of the range. Price broke down in response. Here was the first breakdown bar, and here is the second breakdown bar, and here was the third breakdown bar. Now, we noted last week that some buying support had come in at the lows of the range, which sort of corresponded with this level here. This was the old range, which was offering support to the current price. And this week, spread has narrowed, volume has reduced, and price has moved up to this breakdown line here. This is the previous breakdown line. They're always difficult line to overcome and generally are significant when they are overcome. There's a little bit of fluff just below the actual official level here. So you've got a little zone here, really, which the market has to contend with. That would have been keeping spread narrow to some degree, with some supply being drawn out from above, no doubt. The reduced volume and slightly below average volume suggests that supply wasn't overwhelming or serious, and that leaves the market in a good position to perhaps head high next week. Now, I would expect early in the week a relatively small test for supply like this, and if supply is found to be low, that'll offer the opportunity for this market to push higher in response. And if supply is found to be ongoing, you may find price just pulls back a little more deeply and challenges those sellers before there's any attempt to push higher. But at this point in time, it appears there has been confirmed buying support in the background of the chart, and you can see that the thrust lower has weakened as prices move down. Here was a really serious and strong thrust lower. The next push lower was a little weaker, and the next push lower was weaker again. So this is a logical place for the market to attempt to find some support, and it appears that it's done so. It hasn't been strong enough yet to break through this previous breakdown line. This is the significant level and the level worth watching. If price is able to recover back above that level, it will most likely be worth sitting up and taking notice of, because a push above a breakdown line is always important, and this one looks fairly important with the amount of congestion to the left. So it's probably going to be a difficult level to overcome, and if the market does so, it'll be worth noting. Next chart is the E-mini S&P. This is S&P 500 index futures. This market does have some buying support in the background, which is giving strength to the current market. That was found here. We noted it at the time. Price broke out and tested it. Price broke out a second time, albeit without a great deal of intent. Here's the highs of the range, of the current range, and the market found some buying support come in here, where other markets continued lower at this point. This market continued sideways, which was a bit of a sign of strength, and the market pushed higher last week above this line on an increase in volume and above average volume, but there was some supply drawn out, most likely in the highs of that bar, and in response, prices come back and is testing this line for strength. Volume was reduced, but remains a fraction above average, and it appears the market's made a pretty good attempt to absorb the supply being drawn out. It's traded as an inside bar for the entire week, and a comfortable inside bar. It didn't go down near the lows of the range at all, and it's closed slightly off its own lows for the week. So that was a good attempt by the market to absorb the supply being drawn out. Now we need to see whether sentiment remains strong and if trading conditions remain favourable. If they do, there's almost certainly going to be an attempt to push higher. There may be an early test for supply, but this market is set up to go higher so long as trading conditions remain favourable. If they don't, the market's more likely to go sideways. And if there's any weakness in the market, there is buying support now down to 4,000, I expect, fairly comfortably. And you've got these little congestion zones to the left below that. So there is buying support below. It'll take something really serious to really knock it over now, and the upside remains favourable in the near term. US Treasury 10-year note futures were attempting to break out and kind of failed at that level. There was a number of chances to do so, and it drew out some supply here, attempted to hold on following that, and the market has pushed lower this week. There is some previous support to the left. It's an area of safety, and that's pretty much where the market's pulled back to this week. I expect there is some ongoing buying support down to this level, possibly even down to this level. You've got it coming through here as well. A break below that would be significant, but I expect buying support to emerge sort of in here like this. Next chart is copper price futures. Copper price futures, along with many of the commodities, have buying support in the background. This was like a little accumulation zone. Price did push out, but the initial period of consolidation was quite deep, deeper than I was happy with at the time. And the market wasn't that happy either because it continued to consolidate, but this time at a much higher level within the range. This is the range here, for those who need to know. There was the range there. You can see this was much higher up in the range and therefore suggesting underlying strength in the market. The market then broke out above that, and there's a period of consolidation going on at the moment. You've got a zone of resistance coming through there. Here was the breakdown line, so that's going to play a little part in it as well. And the market was attempting to absorb through that zone, or just the lows of it at the time. Price pulled back 2 weeks ago, and this week volume has increased considerably. Spread has narrowed considerably. Here's the old breakout level here, around the $4 or fractionally below it. This was most likely buying support coming in. Price attempted to go lower. Volume was very high, but the spread was very narrow. And the spread was very narrow because the buyers were coming in. They were buying it. They were buying it. It didn't need to stretch lower to find the buyers to satisfy the sellers. There was buyers there. They were buying it. Now that trading really needs confirmation, and confirmation will come with an up bar in response, but that was more likely to be buying support coming in. And with the volume being quite high, it was serious buying support. It was strong buying support, and it's worth noting. Look for confirmation next week with an up bar in response. Gold price futures have some similarities to the copper price futures. There is buying support in the background, a nice acceleration higher, and initial period of consolidation was quite high. Price accelerated out of that zone and went through a period of absorption as the market negotiated a path through this breakdown line here. There was a little gap out, which gave you some indication of intent. The zone above that comes through here. The price was making a pretty good fist of absorbing its way into that level when supply was drawn out last week. And this week, in response, the market has closed almost adjacent with a narrow spread down bar on low volume. This suggests that what supply there was in the market has been absorbed by the buyers who were happy to buy at this level. Now, there was supply drawn out, and that's why price, when it attempted to go higher, ended up pushing lower for the week. But the low volume suggests that it wasn't overwhelming selling pressure. It was only modest selling pressure, and it was easily absorbed by the market generally. And that's what kept the spread narrow, and that's what avoided the market continuing to push lower. Now that needs confirmation in response. The initial confirmation may come with a test for supply early in the week. Remember, this is a weekly chart, but you really would like to see some form of push higher in response to confirm it. So an early test for supply, I expect supply will be found to be low, considering volume as price came down this week was relatively low, and in response, a push higher. Silver price futures. Silver price futures also have buying support in the recent background. Through here, we noted it on this bar in particular, or this combination of two bars actually. Price accelerated higher. There was a period of consolidation here before price accelerated higher again. And as the market pushed through this level, there's a gap there that needed to be noted. And it goes up to here. This is where the overhead resistance is, supply being drawn out. And the market really did hesitate at that level. It didn't look like overwhelming supply was being drawn out. So perhaps the market did want to consolidate for a period before there was any serious challenge to this level. And in response, 2 weeks ago, price actually did break down below the lows of this range, which was a little disappointing. And volume was high, so supply was definitely drawn out. Probably some profit taking, maybe some short sales, which pushed price down. And there would have been some supply being drawn out from the left, but I expect that to be fairly modest after so many weeks trading sideways. Price did break down regardless and closed clearly below the lows of this range. But this week, just note how narrow the spread was on still pretty high volume. That was a pretty good effort by the market to absorb the supply being drawn out and hold the market up. This was buying support come in. It was actually coming in almost adjacent to this breakout line. This was strong buying support, and in response, I expect to see some form of up bar to confirm this. Like crude price futures have been a little disappointing of late. Here was the initial breakdown line and here was the initial breakdown bar. Price broke down a second time. A little bit of buying support was found down here, but it was only modest. It allowed the price come up to the breakdown line where the market wasn't strong enough to push through. Here was the next breakdown and here was the next breakdown bar, and price has found some support through here. We've noted it previously in the past, and last week I suggested that this was perhaps a fake down bar, which is sort of like part of an absorption, part of an accumulation, and in response, price has moved higher. It hasn't completed a reversal. It hasn't traded clearly above the previous bar's high, and you've got the breakdown line coming through here. A move above this level will probably be significant and worth noting. This, however, is the really important level above that. I said a while ago I expect this market may trade sideways in this zone for a while, and it may continue to do so between 70 or 72 and 80 to 82. It looks like a pretty comfortable zone. There's support in the background previously that comes through at that $70 level, and the market seems pretty comfortable to work there at the moment. So that may be where the market stays for a bit. A push above 82, a clear break above 82, with or without a test of the strength of the breakout, would possibly be significant in the near term, but I'm expecting price to continue sideways at least for the next week or two, continue to build up some strength, and we'll see where it moves from there. Aussie dollar currency futures have pulled back to the logical level this week. The 70-cent level has always been an important level on this chart. Price drifted just below it this week and found support, and this was an absorption bar. Market did see some supply drawn out, and it appears the market has absorbed that supply. So there's a good chance price will continue sideways here, just below the 70-cent level. Bitcoin futures came back a little this week. Here was the previous breakdown lines. We talked about support around this level, around the 16,000 level, and it was never really challenged. And some buying support has appeared to come in down here, which we noted at the time. That's seen price break out above that level, and I expect the highs of this high volume down bar are going to be tested for strength. So you may see a little narrow spread test for supply early next week, and if selling pressure is low, then the market will be well placed to bounce off and push higher. But if selling pressure continues to be drawn out, you'll see price push back more deeply, possibly to this level if required, to challenge the sellers and remove that supply. You've got this zone in here, and that's where price could come back anywhere within this level if supply continues to be drawn out. You can see down here volume was increased this week, but it was actually below average. So there wasn't serious supply drawn out this week. So a little test for supply like this to challenge the sellers and check to see whether there really was any increased supply drawn out. If that's found to be low, I do expect price will attempt to bounce higher. But if supply continues to be drawn out, then I expect price will pull back somewhere in this zone. It'll pull back more deeply if supply continues to be drawn out. And as supply reduces, the pullback will diminish. So just wait and see the response early next week, and you'll probably get a good guide on where the market's going in the near term. Just quickly, we'll go back to the US dollar index futures. It plays such a strong part in many of the other markets. Let's put the lines in quickly. And prices pushed up to this breakdown line this week. It would be important to note if the market did push above this level. I expect the market will test for supply early. That's generally what markets do, especially when they're at an important level. And then the market will trade depending on how much supply is drawn out. The most likely outcome at this level, just below the breakdown line, is for the market to trade sideways. That being said, if the test for supply does not find very much selling pressure, the market would be inclined to move higher in response. But I expect there'll be supply drawn out from the left. That may then immediately push it back down. So you might see price just bumping sideways here. It may even attempt to grind its way through over a period of weeks, more like that. And price will trade within that level repeatedly over a number of weeks. Okay, that's my lot. Thanks for your time. See ya.